Alrighty. Japan, the yen, the AI bubble. How are they related? Why did the US just spend billions of dollars to buy Japanese yen? Are they all crazy? Or is there something below the surface? That is what we are going to be talking about today. And yes, there is. The numbers are crazy. But we're going to take a look at it and we're going to be talking about how Japan and what's going on there with their currency and their economy might lead to the popping of the AI bubble. And we'll talk about that bubble and well, how to define a bubble as well. This is the Option Genius Show. Welcome. My name is Alan Sama. Today I'm doing this by myself because my co-partner, my friend, my co-host, he's not feeling well today. So we're gonna wish him well and hope he gets better so that he can be back on Friday for our next show. But for today, we're gonna be talking about the markets and, like I said, the Japanese yen and how all that craziness is impacting what's going on in the markets today. All right. So first of all, let's take a look at the markets. We had 4 days S&P 500 up. Today is another up day, although we're only up about 8 points right now. So I'm going to call that about flat. Not exactly down. I mean, it was down. It's been up. It was up a little bit more, then it went down, and so now it's flat. So we got this week, or actually the last 4 days, we've been up. Has been up 4%. The S&P 500. So it needs a bit of a rest, right? It's an elephant, I would say, biggest 500 companies. It's an elephant and it's been running. It's been running hard. And so what happens when an elephant runs? It can run very fast. If it doesn't like you, it's mad at you, you're threatening it or whatever, it can run very fast, run you over, pick you up with its nose or trunk, and then just smash the heck out of you. But eventually, it gets tired because it's not like, you know, an endurance athlete, right? It's an elephant. It's big. It's not built to run for long periods of time, which it surprisingly can, but eventually it does get tired. And so the S&P 500 is like that elephant, and does seem like today it got tired. So how long does it stay tired is the only question, right? We've had lots of earnings announcements. We have more coming out today. Today's Wednesday. We got Thursday, Friday. And so we're going to see what happens. Tomorrow, Thursday, is also the lockup expiration for a lot of early investors of SpaceX. And they have been waiting for years to get their investments back. And now that the lockup expires tomorrow, which is a couple days after earnings of SpaceX, we might see a lot of people selling. I mean, they might have invested at like $10, $20, $30 a share, and SpaceX right now is trading at about 112. So should they take it? Yeah, I would, right? It's time to cash in. Time to cash in the checks. Could SpaceX go up? Yeah, but if people are selling, it's going to go down first. So I'm kind of waiting on that. I'm waiting on this little drop tomorrow. But from what I heard on the earnings call, I listened to some of it, didn't listen to the whole thing, but from what I learned on the earnings call, I'm feeling very confident in the company in the long term. Maybe not in the short term. There's gonna be lots of hiccups, right? They're trying to go to the moon. They're trying to put data centers in space. But the stuff that they did say, the advances that they've already made were pretty astonishing. They're growing very quickly. And they own several things. It's not just rockets. It's not just Starlink, which is internet access for 3 billion people that don't have it. They can now. And it's not just AI, it's Grok, which is a large language model. It's not as used as, say, a Claude or a Gemini, but it is catching up quickly. And they also have their chips that they're making, and they also have their compute data centers that they're making and renting those out to other people. So they have a complete, very diversified business in all different aspects. And so the simpler ones, the easier ones, are the ones that are going to fuel and fund the rockets, which is the long-term game. So, but they're all related. So we'll see how that works. I'm planning on putting more and more money into it as it goes down, for the long term. So that's my take on that. But overall today, we were supposed to um we're supposed to get something out of the U.S. government, an agreement, hopefully, with, Mr. Besant, I think the Treasury. I don't even know what he is, but he's part of he's part of Trump's inner circle. He said that we should get a agreement on Tuesday or Wednesday, and today's Wednesday. Didn't get anything yesterday. Didn't get anything on Monday. We got a over the weekend. We kind of got a like, oh, hey, yeah, we're going to have truce. We're not going to bomb them anymore. We're going to have a truce. And the Iranians really want truce. And then the Iranians are like, no, we don't really want truce. I don't know what the U.S. is talking about. And so, yeah, we've been through this cycle back and forth several times. So we'll see how that goes. But um, uh, I lost where you're at. I'm trying to find the comments. All right. So no comments yet. Awesome. Great. All right. So welcome to those of you who are watching. You lurking silently. Go ahead. You say hi to me if you want. But today, let me go ahead, jump into the main topic. All right. So will what's happening in Japan actually pop the AI bubble? So there's different things involved in what I just said, right? There is the things that are happening in Japan. There are AI bubble. So we got to talk about those. And then how are they related? So there's three major components to this. So let's talk about this one at a time. Okay. So the first thing I'm going to be talking about is bubble, AI. Do we or are we actually in an AI bubble? Because if we're not, then there's a mute point. It doesn't matter what's happening in Japan, right? But I'm going to say that yes, we do have a bubble happening in Iran, um, in AI, sorry. And let's get into it. So, first, what is a bubble? Let's define it so we know exactly what we're talking about. Okay. And I don't want to give you just my definition or a weird definition. I looked it up and I'm saying, okay, according to Ray Dalio, okay, this was an article that he wrote on LinkedIn back in 2021. He's been talking about bubbles for a while. So back in 21, he wrote that a bubble is defined by a very simple phrase. Okay. If there's a bubble, it's because there is an unsubstantially high price. Unsubstantially high price. So the price is very high and it's unsustainable, some substantiable. So it cannot stay high. And there are six criteria in that. So criteria number one, okay? Um, it's not just because something is expensive or values have gone up that there's a bubble, but it is because prices are different versus traditional valuations. So the way that they're normally valued on that compared to what they've been in the past, right? So our price is extremely high compared to earnings, compared to cash flow, book value, or any other fundamental. If it's true, then if that's the case, then we might be in a bubble, right? So if normally you have the value of a company is 5 times its cash flow right now, as an example, and right now it goes to 10 times. Well, if the cash flow is the same, but the value just went up doubled, that might be a bubble, right? Number two, impossible expectations. You also need that in a bubble. So, does today's price of the stock require unrealistic future earnings growth to make sense? Now, I just mentioned SpaceX, right? The biggest knock on SpaceX of why people are saying don't buy it or to short it is because the valuation is so incredibly high compared to the expectations. Or actually, the expectations are so completely high and the value is so high that the expectations have to be super, super high in order for that valuation to come true, right? So the price to earning multiple is just off the charts. So that's an example there. Number three, are new buyers flooding in to the market, to whatever we're talking about? In this case, we're talking about an AI bubble. So are new buyers coming in to AI, right? And these new buyers are going to be inexperienced investors entering because they're afraid of missing out. Is that happening? So this is the common story of, the old time story of there was a guy on Wall Street and he used to get his shoe shined every day. And back when there were shoe shine boys on the corners. And so he went to get his shoe shined and the shoe shine boy didn't know who he was, but he was a big titan on Wall Street. I don't know, I think it was like uh JP Morgan or something like that. I forgot who the actual hero of the story is, but he was a big guy, rich guy on Wall Street. And the shoe shy kid starts giving him advice on what stocks to buy, right? And so his idea was like, oh crap, it's time. If the shoe shine boy is giving stock tips, it might be time to get out. Okay. So fast forward to now, do we have something like that happening? Well, I'll give you an example of what happened in the past, and you might have done this, but when Bitcoin was trading at around $100,000 for the first time, every single party I went to, every single place I went to, the men were standing around talking about Bitcoin. Like it was no sports, no politics, no religion. It's just all Bitcoin. Somebody's talking about Bitcoin. Women didn't really care, but the men were all into it. And then substantially the stock fell, or the price fell, went back up again, fell again, and now we're in a bear market. But that was the kind of a thought like, hey, this we've seen this. So if you've been through something like that happening where it's like everybody's talking about it, even the people who don't know anything about nothing are talking about it, that's kind of what this means. So a couple of weeks ago, I had a friend of mine. This guy owns a couple of gas stations, right? He has not been to college, right? So this guy is not the most educated. He follows the news, follows the economy, but mainly he runs gas stations. He called me and he asked me, he goes, hey, my son, who is a college dropout and unemployed. Okay, just a little background. He goes, my son is doing a lot of research and he told me I need to buy Marvel, the company, as a stock because it's going to go up a lot. Now, at that time, like I had heard of Marvel as a company. I didn't know what they did. I didn't know anything about it. So I didn't give him advice, right? But when you have the unemployed kid telling his gas station owner dad, who doesn't know anything about finances or the economy or whatnot, really giving out advice or even asking and say, hey, I'm going to invest in this. What do you think? Yeah, we might be in a bubble, right? And for you don't if you don't know, Marvell Technologies is a company that is in the AI space. I believe they make the help with data centers and chips and all that stuff. I know it's there. I forgot what they do. Number four, are we in a bubble? Is there an extreme bullish sentiment? Does almost everybody believe that prices can go higher? Well, Um, we've been up today 5 days in a row on the stock market. The S&P 500 has made another new time high yesterday, and it made an all-time high, intraday high today. Um, it's up 4% in the last 4 days. And even with the war in Iran, the stock market never really sold off. It was down a little bit, but never that much. Now, the AI names, like the chip names, Micron, SanDisk, yeah, those guys sold off a lot, but the overall stock market did not, and it's still going higher. So, does everybody believe prices can go only higher? There's some people that are short, but they're bleeding money. And so I would probably say yes to this one. More and more people are putting money to work. Money is coming in off the sidelines. More and more people are excited to get in because they also see that, hey, AI is coming. They're going to take my jobs. I need another income source. I need more money. I need to be richer when this stuff happens. And what's working right now? Oh, the stock market keeps going up. Okay, let me put more money in there. So it's just a cycle that just gets bigger and bigger. The ball is getting bigger and bigger, and then I go, the bubble is getting bigger and bigger. Number five, heavy leverage. Are investors borrowing aggressively to buy AI? And we did a show, maybe 2 or 3 shows ago, where we talked about how leverage in the market is super high. It is super high with retail stocks, retail investors, right? It is super high with institutional investors. Both of them. We looked at both. We took a look at how much loans, hedge funds, and all those guys have, which is super high levels right now. And we also took a look at the retail investor and how much they are using of their margin capacity. And not only are they using margin to buy stocks and ETFs in AI, but they're buying the ones that are double leveraged and triple leveraged, like the SOXL, which is the three times leveraged semiconductor ETF. So not only are they borrowing money to buy something, but they're buying something that is borrowing money and highly leveraged to what the underlying is. So recipe for disaster at that point. And number six, speculative buying, forward buying. Speculative forward buying. Are buyers purchasing early? Are they building inventory or are they locking future purchases because they expect prices to keep going up? So let me repack that, right? So the people that are building these data centers, the people that are buying these chips, the people that are buying the land, are they building inventory because of demand right now? Or are they doing it because of what they think is going to be needed? Locking in future purchases now because they think prices are going to go up. Well, NVIDIA has a multi-year backlog. Samsung has a multi-year backlog. AMD, same thing. Um, all the chip names, Micron, SanDisk, Seagate, Western Digital, they all have backlogs. So if you want to call them and say, hey, look, I need some stuff for next month, they're going to be like, haha, try again next year, right? We're going to send it to you next year sometime, maybe in 27 or maybe in 28, depending on the company. So have people already locked in purchases because of what they think they'll need in the future and also because they think prices are going up in the future. I would say yes to that. So again, what are the six things? Prices versus traditional values. I believe that is a yes in this case for AI. Impossible expectations. I believe that is yes also. We just had a company yesterday. I forgot which one it was. They had earnings. AMD. Sorry, it was AMD yesterday. Had earnings. They did great earnings. They made a lot of money. Stocks down 10% because their guidance, what they said they were going to do in the future, was lower than what the Wall Street expectations were, what the analysts wanted. So people sold the stock. Impossible expectations is basically. So yes, definitely. Are new buyers coming in? Yeah. Gas station owners are not buying stock because their unemployed college dropout kid told them to. Yeah, that's the research. Okay, that's what's happening. Extreme bullish sentiment. Does everybody think prices can go higher? Yes. Is it happening? Yes. That's why I think it's gonna happen. Heavy leverage, yes. And then forward buy, yes. So we have all six conditions of a bubble in the AI space, according to Mr. Ray Dalio's definition. Now, there is another definition that I want to go through. Okay, another way to look at it. So you can tell when you're in a bubble when there is more wealth than money. Now, these two are two different things. Wealth is not the same as money. Okay. Wealth is your net worth. Wealth is the stuff you own, the values of the things you own, while money is the actual cash, the things that can be spent. Right. So when there is more wealth than money and the wealth continues to grow, that means that we are in a bubble. So what does that mean? Well, stocks are at all-time highs. I've mentioned that before. The Dow is an all-time high. The Russell 2000 close to an all-time high. S&P 500 all-time high. Nasdaq close to it, coming back, right? There's a lot of wealth there. The stocks have gone up. There's a lot of wealth created that people have not sold. It's still sitting in their stocks that they own. It's still sitting in their gains. It's still sitting in their trading accounts. They have not taken the money out to go spend it. We also have real estate at all-time highs. Property values have gone up like crazy, and they're not selling. So people are trying to take the wealth that they have in their real estate. Maybe they have uh, a house, vacation house, or a rental house or something that they want to sell, or they have their own house that they want to sell and move. And they have a lot of equity in it. They have a lot of wealth in the house, but they can't sell it because there are no buyers, right? The buyers are not there. Rates keep going higher. And so they cannot exchange the wealth of that house for money, but the wealth is there. The money to buy it is not. All right. Now, yes, real estate is falling, and so that is one thing that will might ease the bubble a little bit, but it might fall because of the bubble popping. So we have to check. We also have IPOs. There have been several IPOs. Now, SpaceX is the biggest one, but they also had SK Hynix, right? That was a huge one. Before that, we had Nebius or something, NBIS. That one was a huge one. There were some other ones. There's been a lot of wealth created in the AI space, and a lot of companies have crazy, crazy billion, trillion dollar valuations because of their future projected growth. So the people that invested, the private equity that invested, the venture capital that invested in these companies, the employees of these companies that have been given stock options, they have a lot of wealth. But again, that wealth is not spendable, right? We talked about earlier about the lockup of SpaceX expiring tomorrow. So there's people that invested at a very cheap price in SpaceX a long time ago, and now they can finally exchange their wealth for money. And then they can take that money and do whatever they want with it, right? But it's finally being freed up. So will they take the opportunity to sell SpaceX stocks? Yes, I would, right? I don't know how much. Hopefully, right now SpaceX is like what I say, it was at it's at 110 as I say this. Is it going to drop to 100? Is it going to drop to 90? I don't know. Depends on how many people sell. That would be, in my eyes, a great time to get in. But then again, if we are in an AI bubble, which I'm saying we are, when the bubble pops, we might even go lower. Okay. Then we also have AI funding throwing around trillions of dollars. They're buying everything they can. They're buying land, they're buying energy, they're buying water, they're buying data, they're building data centers, they're buying chips, they're buying everything they can. They're buying all types of commodities to build all this stuff out. And they have trillions of dollars and they keep going into the markets to borrow more. They keep going into the bond market to borrow more. And there's this incestual relationship between all these companies. Like Nvidia is like, oh, hey, we're going to invest $100 million into this company. Well, yeah, because you're giving them something in exchange for them buying your chips, right? So it's incestual how it works. So I think we can agree. Well, if I can, I don't know if I've convinced you, but I could think we can agree that we are in an AI bubble. So next question is, what happens at the end of the bubble? Like, how does the bubble pop? What causes the pop of the bubble? All right. So one of the major things is when there's a lot of wealth, but instead of the wealth, people need the money. So the popping of the bubble occurs when wealth is needed to turn into money. All right. And we don't know what that's going to be. In the past, it has been higher interest rates. So when rates go up, that causes it could cause all kinds of things. It can cause a margin call. It can cause loans being due. It can cause higher payments, right? If somebody's borrowed money, they have higher payments and they cannot make the payments for whatever reason. So then they have to get out of that asset. They have to sell the asset because they can't pay the loan anymore. The other thing is higher taxes. So if there are higher taxes or taxes to be paid, that can force the selling of wealth to use money to pay the taxes. So again, these SpaceX people, right? The investors, if they have a tax bill coming because they made a lot of money on the SpaceX stock, they have to sell their shares in order to pay the taxes, right? So there's two major things that pop a bubble. We don't know. There's a, probably could be others as well, but it's something that forces the wealth to turn into money. And when all of that wealth tries to turn into money right away, and again, like we said, they're unbalanced. There's a lot more wealth than there is money out there, right? When the wealth tries to convert into money and there's not enough money, guess what happens to the wealth? It goes down. Right? And so that's what pops the bubble. And it's a crescendo. So it happens slowly, slowly. And then once it pops, it just goes full circle, full craziness. So that is part one and part two of our topic, right? Now, how does Japan fit into this? Well, if you remember, I believe it was, ooh, man, it's been a while, but we had um, a day a couple of years ago when the Japan carry trade was in trouble. Now, the Japan carry trade is a massive, massive trade run by hedge funds, which is basically almost guaranteed money. Okay. The Bank of Japan has been lending out money for basically 0% interest or even less. So they've been paying people to borrow money from them. Their interest rates were negative for a while, or they were very, very low. So these hedge funds would then go to the Bank of Japan, borrow money from the Bank of Japan, and then buy U.S. Treasuries, right? U.S. Treasuries are guaranteed. So 2-year Treasury, 5-year, 10-year, 30-year, they're different. You can buy different ones, but even if you buy the 2-year, you're making about 4%, somewhere in that range, 3-4%, but you're borrowing it at close to zero. So as a hedge fund, if you have a risk-free trade, you're borrowing at zero, you're guaranteed to make three, and you can borrow money to do this trade, that's the perfect scenario, right? Because hedge funds, they can leverage up 10 times, 20 times, 30 times. So for example, if you can borrow $1 million from the Bank of Japan and say, hey, look, I got $1 million. I'm going to borrow money from you as collateral. They got to show some collateral, or they borrow it from the Bank of Japan, and then they invest it, or they actually give it to the Bank of Japan. Yeah. No, sorry. They borrow from the Bank of Japan, and then they buy U.S. Treasuries with that money. Now, if you're leveraged, instead of doing 1 million, you could do 10 million. Instead of doing 100 million, you could do a billion. So they went all in on this trade, and it's been a long-term trade. It's been around for a while. Well, over one weekend, a couple years ago, the Bank of Japan was deciding to raise their rates. They weren't going to do it at 0% anymore. They were going to thinking about raising the rates. Why? Because their economy is in trouble. They're dealing with inflation, and they're dealing with a very weak yen. So the yen has been super, super weak lately, the last several years. And my kids, my boys, they went on a trip to Japan this summer. A couple of weeks. They had a great time. My younger son, he's 14. He had a blast buying things. Like he just went crazy. He bought shirts, he bought shoes, he bought sweaters, he bought all kinds of stuff because he would go to the stores there and he would do the calculation of how much it's costing in dollars. And he knew the prices back home. And he's like, Dad, everything is so cheap here. Because a dollar at the time he was there, a dollar was about 150 yen. So if the prices are exactly the same, he's getting a better deal. So he can buy it cheaper over there, pay no duty and no whatever. He can bring it back, and it'll be much cheaper than he could buy the same stuff here for. So he had a blast. He went crazy. Now, and if when we told people, oh yeah, our kids are going to Japan, they're like, yeah. A few people made the same comment. They're like, yeah, everybody's going to Japan right now. Why is everybody going to Japan all of a sudden? Well, it's because of the difference between the Japanese yen and the US dollar. The dollar is much stronger than the yen. And the yen has continued to get weaker and weaker so that when a US citizen goes to Japan, it's much cheaper for them. They can buy stuff, all kinds of crazy stuff, and it's much cheaper. Now, in the 80s, it was the opposite. Yen was very strong compared to the dollar, and so go to Japan was very expensive. Now it's flipped, and it's getting worse and worse for Japan. And so over the weekend and this week, there was some oh, sorry, let me finish the story about the yen carry trade. So over the weekend, at that time, a couple of years ago, Japan was saying, "Hey, we're going to raise rates or whatever," and that caused the VIX to go up to, I don't know, it was like over 60, over 70, 80. I don't know exactly the number, but it just spiked up. The market sold off on Monday. Had a really could have been really, really worse, and then things kind of settled down. But it was just it was a glimpse into a potential future that if Japan does something to their economy, it's going to impact the US economy and then in turn the US stock market. Big time. Bigly, right? So, what is going on? Well, over the weekend, we had the US government, the Treasury, actually go in and buy billions of dollars worth of Japanese yen. Uh, and the reason was to keep the yen from falling against the dollar. Why is that important? What? Okay. So we have to know how Japan fits in this, right? So they need money to keep their dollar or their yen from continuing to fall because things are getting more and more expensive in Japan and the people don't like it. Now, what are the ways they could do that? Well, they could raise their rates, but then that would put a kibosh on the economy. Okay. It's going to be a big turn or a big adjustment to go from rates are close to zero to rates are getting more expensive. And so lending will get weaker, real estate will get weaker, all kinds of things will start happening, and that they don't want to happen. But they need the yen to stop falling and get weaker. And so one way they could do that is to buy the yen. So that they were doing an intervention. Japan wanted to do an intervention to help the yen. And I don't know if they reached out to America or America reached out to them. But in order to do this intervention, Japan would have to have money to then go in and buy the yen to prop it up, to make it stronger, right? Where are they going to get this money? They're in debt. So, yeah, they can borrow the money or they could sell their investments, which is probably better than borrowing the money. Well, Japan is the number one holder of US treasuries. They are the number one holder, foreign holder of US debt, not China, not anybody else. It's Japan. And so they decided, hey, we got all these treasuries, we got all this money tied up in this US debt. Why don't we sell the treasuries? Why don't we sell the debt to somebody else, get that cash, and use that to prop up the dollar, our yen? Well, the US can't really allow that. Not right now. Because if that happens and somebody, a big seller of treasuries comes on the market, well, in order to get somebody to buy those treasuries, you have to give them a higher rate, right? Because if there's so many people selling and very few people buying, what do you got to do? You got to make it more cheaper for the buyer. And so you have Japan trying to sell treasuries, but then at the same time, you also have the US trying to sell treasuries, right? And so Japan is, they can take a hit, they can take a discount and sell it at a higher rate for somebody to make a profit so that somebody would buy treasuries from them instead of from the US. So hopefully this is making sense now. So if Japan comes on the market and starts selling off US treasuries, guess what happens to the interest rate on those treasuries? It goes up. And so the US, they have to keep selling treasuries. They don't have a choice. because they have too much debt that they need to finance, they will have to pay higher rates on their treasury. So they go more into debt and they have much more in debt payments that they have to make. Also, the treasury rate is what dictates credit cards, the Fed, mortgages, all these kinds of stuff. And so if interest rates go up because of this, interest rates go up across the whole US economy. Now, what happens when interest rates go up? Well, payments go up. And that could be something that causes people to try to turn their wealth into money so that they can pay their new payments or pay their debt. Okay, so now we're bringing this back to how this works with the bubble. So if Japan has to prop up their yen currency in order to help their economy. Their idea was, okay, well, how about we just sell our assets, which are treasuries, in order to do this? So we'd be fine. So Japan's like, okay, we're good. We did an intervention. We helped our economy. For now, it's doing good. We sold some of this stuff. Well, because they sold the treasuries, that caused the rates in the US to go up. When rates in the US go up, people who are leveraged get hurt. So the hedge funds and the retail traders who are highly leveraged, now they're paying a lot more money on the leverage and the margin that they're using to invest in the stock market. So what do they have to do? Ooh, well, they have to sell. So the stocks are going to go down, interest rates will go up, and that will make the whole economy harder. Now, you have the Fed coming in and saying, oh, yeah, we need to raise rates because of inflation. Well, this is the market doing it for them. And that's not what they want because they need to be in control of the situation, not let somebody else be in control. And so that is why they went in and they spent billions to prop up the yen by buying yen with US dollars. Okay. So this was a temporary thing. It's done, right? But the problem with the Japanese currency is not over. It can get worse. So when it happened, let's see, I have the numbers here. The Japanese currency was trading at about $1.64 or 1.64 yen to every $1. As soon as they did this, it dropped all the way down to 157. That happened in 2 days. Now, that is a 2 month, it took 2 months to go from 157 to 164. Okay. And it went back down in 2 days. That is off a 40-year low. So it has never been that different in 40 years. Okay. That also sent the 30-year treasury in the United States from 5.2 to 5.25. So it pushed up the range. That's the range of the 30-year treasuries from 5.22 to 5.25. So that pushed up to the highest it has been since 2007. Meanwhile, the VIX is around 60. So the VIX is low, stock market is doing fine, but treasuries and interest rates are going higher and higher. The 30-year fixed mortgage is up to 6.66, right? That is the fourth weekly rise, and it has just gone up every week in July. That's how this impacts us. Interest rates going up. If you're using margin in your account, the margin percentage, the margin interest rate will go up. And so you need to make more from your stocks or the trades that you're doing in order to pay for the margin. A lot of people might say, hey, it's not worth it. So let me get out of this trade. Let me reduce my margin. That's going to cause selling. And then you also have other people who are trying to get their wealth out convert it into money at the same time, like people in SpaceX who are trying to sell their shares, people in all these other companies that have gone public that are trying, they're going to sell their shares. So a lot of people are going to be trying to convert their wealth into money. Now, right now, it's doable, but it's kind of like a movie theater where there's like two exits and hundreds of people, and everybody's going to try to get out at the same time. And it's going to be a massive logjam. And so either, you know, people are going to give up or prices are going to completely collapse and the bubble will pop. So that is how all of this works. And that is how Japan could cause the AI bubble to pop. I don't know if it's going to happen tomorrow, but the issue with Japan is not over. And this is why we need to pay attention to what's happening in Japan. Because the number one reason is they are the number one holder of US treasuries. Okay. Um, they actually own $1.2 billion worth of treasuries. After them comes the United Kingdom at 866. Oh, sorry. Did I say billion? I meant trillion. $1.2 trillion of US treasuries. The UK comes in second at 866 billion, and then China comes in third at 683. So Japan is the number one foreign investor of treasuries. They have a $1.2 trillion worth. If they start selling those, that's going to raise rates here on everything. That is going to cause people to sell their wealth in order to convert it into money so that they can pay their higher payments of their debt that they have because they're highly leveraged. And if too many people at the same time try to turn their wealth, which is appreciated stock, into money by selling the stock, into turning into cash at the same time, that is going to lead to a pop. And right now, the most money is sitting in the AI trade. Almost everybody is investing in the AI trade. So that's why sometimes you hear about people, the pundits, they're like, oh yeah, we like a broadening out of the market. We like the whole market going up. So we like, biotech names going up and we like banks going up along with the AI. We just don't want all the money in the AI because that could lead to a bubble, which I believe we have, and that could lead to a pop and then everything will come down. So question is, when will this happen? Is it going to happen? That's one question. When will it happen? Is the second question. I think I've already laid out to you why this is all related, why this is all, you know, step one, step two, step three. And so if this continues to happen with Japan, the US will continue to need to help them. And so what the US has done is the Fed has opened up a lending facility for Japan that says, hey, Japan, if you need to buy more of your currency, we will lend you the money to do so. So please don't sell our treasuries. Right? We can print as much money as we want, but if you're selling our treasuries, then we can't borrow as much money from other people, and that will cost it to be more expensive for the US government and more expensive for the US consumer and all of these companies that are in the US that are borrowing money to build out all this AI stuff. Okay? So that's how this all works. So the lending facility at the Fed is like, okay, Japan, we can lend you money to go buy your yen. So we'll print the money, give it to you, you buy your yen, and hopefully it will stave off the interest rate rise until, and the idea is, well, hopefully we can make it last as long as possible before the bubble pops, or all of the promise of AI with the advanced or the more, profitability and the more productivity, all that comes into play, and then there's more money created. So that's why you look at an AI company and they're like, oh, hey, are they making money? Yes, the stock is going up. There's wealth being created, but is there also money being created? Is there also profits? Because if there are no profits, then there's wealth, and the wealth really has no value unless there's somebody else on the other side that's willing to buy it and turn it into money. Like you have a painting on the wall that your 2-year-old did. You might think it's worth $1 million, but if nobody else is going to pay you $1 million, it's not worth $1 million. Even though on your net worth, you might say, I'm a millionaire because that painting is worth $1 million because I said so. Does that make sense? I know, crazy example, but bringing it down to normal people's terms, right? That's what we do. We explain stuff. Okay. So that is how all of this works. And so the idea is they've staved off the problem for now. But again, we had the yen carry trade issue a couple of years ago. It could have really messed up the markets. We could have had a massive bear market overnight. They were able to fix it. Now we have this. Um, it didn't really hurt the market, but it did push rates higher slowly. And for the US government and the Trump administration, for their benefit, they jumped ahead of it and they took action and they bought billions of dollars worth of yen. Do they have to do it again? Maybe. We'll have to keep an eye on the yen and see. But this is a major risk to the AI bubble. So I think just a summary. Are we in a bubble? What is a bubble? We talked about that. I think we are in a bubble. Which bubble? The AI bubble. I think we're in the AI bubble. And it's just a matter of how long the bubble continues. Will it continue to inflate or is it full and is about to pop? Um, it depends on how well these forces right now that we're talking about, the threat to the AI bubble that we're talking about today is the Japan economy and the Japan currency. So if Japan and the US and the Fed can get together and they can manage this possible problem so that the currencies stay even, right? And so that keeps interest rates from going higher, that will allow the bubble to continue to stay in place or to even grow for now. But this could be one of the things that forces people to convert the wealth into money. That'll lead a stampede through the exit doors of the movie theater, log jam, and people will get trampled, people will get hurt, and markets will go down. That's normally how it works. So, yeah, these are things we need to keep an eye out in the markets. These are things we need to know about when we're talking about economics and the big picture and how the global macro picture works together, because we're not in a bubble by ourselves anymore and probably never will be ever again. So hopefully this makes sense. Yeah, so that is it for today. Hopefully this was helpful. Hopefully this gives you something to think about. And if it does help, these are things that we talk about inside the club. So if you want to join the club, there's a link below this video. There's a link below in the description. Club is a wonderful place to learn how to make money. And this is the stuff we talk about and how it all works together and how things can cause future problems. So if this is something you know about, you can keep an eye on it. And so when it starts to happen, or if it gets worse, then perhaps you can be ahead of it before other people, right? Because the idea is, hey, yeah, there's a bubble. Everybody knows there's a bubble. Even the people who are like, no, there's no bubble, they know there's a bubble. Okay. But it's the greater fool theory, right? Everybody's thinking, hey, when the bubble's about to pop, I'm going to be able to get out. I'll be one of the first to get out because I can see it. So that's the whole game. Like, can you see the bubble popping and can you get out of the exit door before everybody else? If you can, then maybe you'll be safe. If not, then you'll be trampled. So that's that's the whole thing. So hopefully this made sense. Mark saying, "Yep, interesting topic, good show, awesome, great. Hopefully this was helpful." Again, subscribe, leave a review, comment, something. We need the help in growing the news, in growing our channel, and in growing, getting the word out there that passive trading is the way to go, even in this environment, even in a bubble. Passive trading is still freaking doing awesome. Okay. So yeah, it works in all markets. That's it for today. Thank you for being with me. And we'll see you on Friday. Hopefully Matt will be feeling better. Matt, feel better. We'll see you guys on Friday. Take care.